it's time for that 55-minute trip around the world of business. You only have it here on Channels Television. Here's what we have prepared for you on this episode of the program. Nigeria's simplified tax regime begins as President Bola Tinubu approves an executive order. Kenya is seeking to increase its import duties on palm oil. And we're looking at cocoa. The price has tumbled after that all-time high in April. The program is Business Incorporated, and I am Ini John McQuarrie. We'll do 55 minutes starting from the global space. Oil prices were a little changed on Tuesday, holding near 2-month highs that it reached in the previous session on expectations for rising fuel demand from the summer travel season and possible U.S. interest rate cuts that could boost economic growth. Brent crude futures rose 20 cents to $86.80 a barrel after gaining 1.9% in the previous session to the highest close since April 30. U.S. West Texas Intermediate crude rose 13 cents to $83.51 a barrel after gaining 2.3% to its highest since April 26. Gasoline demand in the United States, which is the world's biggest oil consumer, is expected to ramp up as summer travel season picks up with Independence Day holiday. This week, the American Automobile Association has forecast that travel during the holiday period will be 5.2% higher than in 2023, with car travel alone hitting 4.8% higher than a year earlier. On the supply side, market is planning for possible disruptions from Hurricane Beryl on United States oil refining and offshore production. However, forecasts currently show that storm likely will move into Mexico's Bay of Campeche and cause problems for oil production there. A report on Monday showed that manufacturing activity contracted for a third month, and prices manufacturers paid for some inputs dropped to the lowest level in 6 months. Still in the global space, gold prices fell on Tuesday under pressure from elevated U.S. Treasury yields and stronger dollar, while investors await comment from the Federal Reserve's chair, Jerome Powell, for further clues about interest rate path. Spot gold was down 0.3%, $2,325.30 per ounce. The benchmark 10-year Treasury yield hit a 1-month high on Monday and held elevated on Tuesday, making non-yielding bullion less attractive amid bets on the possibility of a second Donald Trump presidency. Gold is down 5% from a record high of $2,449.89 per ounce. It touched that on May 20, a rally caused by safe haven demand driven by geopolitical and economic uncertainty, as well as persistent central bank buying, which is a crucial category of demand. Then we come to Nigeria. As pharmaceutical inflation bites at the disposable income of Nigerians, the federal government has moved to slash taxes on pharmaceutical inputs and medicines. Stakeholders in Nigeria's pharma industry are optimistic that this will help reduce prices. But more has to be done to get doctors back to Nigeria and boost investment in the industry. Dr. Enat Harkus made this comment on Business Morning earlier today with Laddie Williams.
When I look at the Nigerian healthcare sector, there are 5 issues that I think are prevalent that need to be addressed. One is, and I coined the term TRACE, the acronym TRACE, which stands for training, retention, accountability, consequences, as well as equity. So the A is also for access as well. And I think that these 5 things are really the pillars on which the recovery should stand. We need to train our physicians better so that they can even be up to world standard. Apart from slashing taxes, we need to make sure that there's a follow through in the reduction of the cost of these medications, especially to those who are not able to afford the medicines. So, for example, in the U.S., we have subsidies. So the government provides subsidies so that the medications are not as expensive. And I think that this is so important for the government to say, apart from slashing taxes, how can we inject the system so that we have less burden, financial burden to get these medications? So, there was a time that Nigeria was on par with the Western world in terms of medical care and medical education. And I believe that we can get back there. And we need to be able to attract our physicians abroad to come back and, give a month, give 2 months in the year. And if the more physicians that we have, the more that we can do.
Now we'll go to the MBS. They've been very busy. Latest report from the National Bureau of Statistics shows that 675,293 passengers traveled via rail system in the first quarter of this year, 2024. And that's relative to 441,725 reported in the corresponding quarter of 2023. This indicates a growth rate of 52.88%. Meanwhile, the volume of goods cargo transported via rail for the period stood at 160,650 tons, compared to 59,966 tons that was in the first quarter of 2023. In the quarter under review, the Nigerian Railway Corporation reported an additional volume of goods and cargo transported via pipeline, which stood at 8,000 tons. In terms of revenue generation, 1.42 billion was received from passengers during the reference period, showing an increase of 84.91% from 768.44 million recorded in the same period of the previous quarter. Similarly, 607.32 million was collected from goods cargo conveyed via rail in the first quarter of 2024, and that's an increase of more than 235% from 181.27 million received in the first quarter of 2023. In addition, revenue generated from the movement of goods cargo via pipelines stood at 59.14 million in the first quarter of 2024, and the other receipts, they amounted to about 25.4 million, indicating a decline of 25.65% in the first quarter compared to the same period of 2023. Still doing data now, the total number of active voice subscribers in the first quarter of 2024 was about 219 million from 226 million reported in the first quarter of 2023. That indicates a drop of about 3% on a quarter-on-quarter basis, and active voice subscribers fell 2.41%. That's for the quarter-on-quarter basis. Also, in the first quarter of 2024, total number of active internet subscribers stood at 164 million from 158 million reported in the first quarter of 2023. This shows an increase, 4.33% quarter-on-quarter. And then on the state profile, we see that Lagos State had the highest number of active voice subscribers in the first quarter of this year, with almost 26 million people. On the other hand, Bayelsa had the least of that, 1.6 million, followed by Ebonyi and Ekiti states. Now, President Bola Tinubu has approved the executive order proposed by the Presidential Committee on Fiscal Policy and Tax Reforms, led by Mr. Taiwo Oyedele. According to a post on Mr. Taiwo Oyedele's handle, it shared that simplified and business-friendly withholding tax regime has been approved. The list, according to that post, changes will include withholding taxes, which will now have an exemption of small businesses from paying that. So small businesses are exempted from paying withholding taxes, reduced rates for businesses with low margins. That's also another change. Exemptions for manufacturers and producers, such as farmers. That's part of the key changes. Measures to curb evasion and minimize tax avoidance. Then there's the ease of obtaining credits and utilization of tax deducted at source. Then changes to reflect emerging issues and adopt global best practices. And then there's also clarity on the timing of reduction and definition of key terms. And before we got that report, Mr. Tao Yedele was on our sister program, Sunrise Daily, and he elaborated on some of this and more expectations from their proposed reforms.
We are now moving to phase 3 of our work. Our work is divided into 3 phases. The first phase was quick wins, second was critical reforms. We just completed that, and now we're moving to implementation. So as we speak, we have about 5 draft executive orders. We have a withholding tax regulation that has just been signed by the Honorable Minister. So it's currently with the Ministry of Justice for the formatting, gazetting, and then it will be published officially. And that's going to provide a lot of relief to businesses, particularly small businesses, but even for all businesses in terms of the pressure on their working capital. You know, we need to free up capital for businesses, especially now that the rate of interest is over the roof. So that has been implemented now as we speak. We also have draft laws. We've drafted all our major tax laws. We've drafted brand new ones because we took the view that we shouldn't be amending laws that some of them we inherited from our colonial masters. There's no need trying to amend those. So we've drafted new ones. We have sent about 10 amendment bills to the National Assembly for constitutional amendments, because some of the issues we identified during the extensive work we have done, actually the problems emanated from the Constitution itself, like overlapping powers on taxing rights. At the end of the day, you have VAT, for example. You also have consumption at the state level. Who suffers? The Nigerian people. So we thought it's important to provide clarity and clear demarcation. So we have done a lot of work. So we're pleased with the progress we have made so far.
So it's a new tax regime in the country. We have that approval now to that executive order. So we hope to see how that is implemented. And I think, as Mr. Yedele continuously says, streamlining the system so we don't have leakages also in the midst of all of this. Now let's talk about cocoa. In mid-April, cocoa prices reached an all-time high of about 11,461 for metric ton. Unfortunately, here in Nigeria, a lot of farmers could not benefit from that. But now that has changed. There was shortage then, there was adverse weather, and then there was the disease in Ghana and all of that. But that has changed now. There's been a 36% decline from that all-time high in April. Let's find out more about this and perhaps see what our farmers are coping with an issue such as this. And joining us for that conversation is Oluwaseun Lawal. Oluwaseun Lawal is an analyst with financial derivatives company. Hi, Oluwaseun. Good afternoon.
Hi, Hini. Thank you for having me.
Great. So what's causing this decline? What has happened? The weather is better now. We have more supply.
Let us first examine the trend back from January 2023, where cocoa traded for around $2,600. And then fast forward to January in 2024, where it traded at about $4,500 per metric ton, before going to around $12,000 in April, which was driven by adverse weather conditions in cocoa producing regions of West Africa. And then the announcement by EU that they would stop patronizing countries who are seen to use child labor and women labor in the production of cocoa. So now the prices are falling because the weather is better, and that is sending signal to the market that supply is going to increase soon. So traders are now selling off future contract on cocoa, and then those massive sell-offs are translating to the market and the prices are coming down. So that is why you see the decline, the 36% decline from the all-time high to what we have now, which is around $7,200 per metric ton.
I mean, the thing is, even when the price was surging in Nigeria, farmers could not optimize that opportunity. So I wonder what's happening to them now.
The truth is that when you examine the value chain of cocoa production in Africa generally, let's take example Ivory Coast. Ivory Coast produces like 40% of the world cocoa production. However, their earnings from the whole production, the value chain is like 4%. So that would explain why farmers are still kept poor, because most of the money that goes into that comes from the value chain does not go to the farmers. It goes to people who are producing the chocolates in Europe and then even exporting them to Africa. And we have to pay out of our money, to buy those things. So, but then this decline in price does not exactly change anything when it comes to the value chain. We need to look inwards, see how we can improve infrastructure to capture more of the value chain, process our cocoa ourselves, convert it into chocolate, and see if we can export them out of the country and to capture more of the value chain.
Yeah, so what do we see in the coming months? We know that weather is a major threat to the supply of cocoa, and of course, once that comes in, it also affects the supply and then the price. What do we see in the coming months, remaining months of the year?
Well, in the coming months, there are different aspects that will determine what will happen. So we have the supply side and we have the demand side. On the demand side, demand is expected to increase towards the end of the year. Number one, inflation is dropping in major economies, especially US, which is the number one consumer of cocoa. So what that means is that purchasing power of consumers is going up. They have more money to buy these things. And then festive seasons also affect the price of cocoa. In the US, they have Halloween in October 31st. And one of the major periods that peak demand for cocoa is during festive periods. So chocolates are one of the items that people give away. And then we have the Christmas season coming. So demand is expected to rise. And when demand is rising, if there is no corresponding increase in the supply of cocoa, so it might affect the price. And then the factors that are affecting the supply of cocoa are still very potent. Weather conditions are still relatively unstable. EU regulations are still very much there. And then we have information that COPEC, there may be establishment of a cartel for cocoa exporting countries. So if that happens, that means prices of cocoa will be more regulated, and then those things will feed into what we see in the near term, in the coming months.
Yeah, and we do hope that in the midst of all of this, that if Nigeria can actually boost its supply, then we can also be, a major player, whether it's COPEC or in OPEC, instead of just being moved around. But thank you so much for your time and sharing your views. Oluwaseun Lawal, analyst with Financial Derivatives Company.
Thank you.
All right, let's take a break. When we come back, we'll head to the market, and other stories await you on the other side of Business Incorporated. Stay with us. Oh, just before we go on that break, for our DSTV viewers, we have to lead you to Abuja now, where there's going to be an official flag-off ceremony of the construction of Kubo Bus Terminal. It's continuation of the work of the FCT Minister, Minister Wike. He's been busy. He was on yesterday, so it's a continuation of that. But for our viewers on other platforms, we'll see you after the break. Welcome back to Watching Business Incorporated right here on Channels Television. We head to the markets now with Will Ibong. Will?
Hey, good afternoon, Ini.
Good afternoon, Will.
All I can say is that the markets, especially the NGX, did not kick off the second half of 2024 on a positive note.
I'm just glad that we're on 100,000.
Well, it's not just the fact that we're on 100,000. We probably are barely hanging on to the 100,000.
We'll be better by the close of trade.
Okay, I'll keep, hold on to that optimism. It's quite infectious, so I'm just going to take it contagious.
Okay.
So I'm just going to keep that spirit up and keep that momentum for the close of business. Let's kick off with major equities in Africa, where we see sentiments at intraday were mostly negative. Nigeria's NGX was in the red, flat 0.01%, still hanging on to 100,000 there. But we'll see, just like Ini mentioned, if it's going to hold on to that level. Now, South Africa's JSE was also trading down at intraday, 0.37%. And Egypt's EGX30 traded up. That's the lone gainer in that area, in Africa, 0.18%. And Kenya's stock market also closed Monday's trading session in the green. Now let's look at what's happening at the NGX now. Let's bring in Mr. Kofi Garba. He's the CEO, APT Securities Limited. Good afternoon, Mr. Garba. It's good to have you on the program.
Thank you for having me.
Mr. Garba, please talk to us. We're in the second half of 2024. What's driving intraday activity? What's driving the stocks at the market right now at intraday?
Well, as at now, the market looked at just flat, but hopefully the market will rise because what the market did for the first half year is surprising. Almost double our turnover compared to 2023. We closed with about 1.3 trillion turnover for the half year ended 28 June, compared to less than 800 billion for the 2023. Don't forget that in the first quarter there is more foreign inflow, about $3.3 billion comes in through foreign direct investment compared to 1.1 in 2023. So there is all hope that more are likely going to be seen in 2024, especially in the second half, in view of the fact that most of the banking capitalization, we have just seen one, and more are likely coming in this second half year. And that will trigger the activities of the market, both in the secondary and the primary market. So we have the hope and the confidence that by the time half year result be released, you will see the trend in the market will go into positive. Remember, July is most of the time close in the positive year. And this year, we are not expecting to see something different.
Okay, you're talking about the historical trend here. July is always in the positive. But we see the first trading day of July, that was yesterday, kicking off on a negative note. Sentiment report, if we look at that, it showed that there was 40% buy and 60% sell at the NGX. Should we expect this trend to continue, or do you see that turnaround and we see that, historical trend playing out for the rest of July?
No, those are just correction for the half year ended. But I can tell you, way forward, we are expecting to see more activities because there is expectation. And most of the companies have declared their Q1 with a positive result. We are expecting this trend to continue in the Q2. And don't forget that there is likely going to come to the end of the issue of minimum wage. And this will translate more inflow to the general workers. And if there is more inflow, some part of it will find their way into the investment line. So I expecting to see more positive response in the second half year.
Okay, I would like to really share your optimism, but we did see that PMI report from Stanbic IBTC, which shows that, the PMI Purchasing Managers Index dropped to 50. That's hanging on that level, that anything lower than that shows that there's a contraction. Do you see companies who are struggling right now making that turnover that you're talking about and seeing, presenting good results for the second half?
Yes, we are expecting this to happen. There is no way you will review the salary of the workers and you will not see more increase reflected in the turnover across the commodity market and what have you. So we are expecting this will be across the board because there is more increase in the purchasing power and definitely sure will reflect in the performance and the activities of most of the company. Yes, we have seen the PMC, the purchasing power index going down, but this is not likely going to continue. We are anticipating that it may go off in view of the fact that the issue of this minimum wage will come to conclusion within this month. And we are hoping that the state will also abide by the minimum wage and across the private institutions, and this will translate more inflow to the workers who are generally played to the market.
Okay, so speaking of companies now, what sectors should investors be focusing on in the second half? We do know that we want to know where to play at. So this monies that we are getting, especially talking about the minimum wage, people would know how to invest it to be able to make real returns, increase their income and, double it rather than have inflation, erode it.
Well, the sector that is the agriculture, no doubt over it, as well as the food and beverages, because these are the sectors that you must eat. And when there is more inflow, people will increase their consumption. So we're expecting companies like Cadbury, like Nestle, like Flour Mill, most of them were expecting to see positive increase. We are also equally expecting the same to appear to most of those companies that are into beverage, like Nigerian breweries, Guinness. We are expecting to see increase in their turnover. The other sector that we are expecting to see more is that of the oil sector. There is no doubt we have seen most of their results, and they are likely going to do. Power is not exception. Power have already get the increase in both the tariff and the stable supply. So we are expecting to see more increase in the turnover in the power sector, even though their prices for some time have been stagnated, but it's a matter of time. When they declare their half-year result and give the confidence and the promise, you will see more rally into those sectors. So these are some of the few sectors we are expecting to see more.
Okay, thank you so much, Alhaji. But before I let you go very quickly, I just wanted to tell us, let's come very closer now because we've been talking about the expectations for the half year. How do you see the markets closing today? What stocks would investors be trading or fading, and how would the markets close?
If you look at it, recently you will see that some of the major banks, like the Fidelity Bank, Zenith Bank, UBA, Access, they are all in the positive gear. And if they sustain this one, the index will close positively. Because today, the major player are the banking sectors. And definitely sure they are the one that raise up the index, because the top five are not likely going to change, except probably the MTN. But I don't see much for the Dangote cement, for the Boa cement, Boa food. And therefore, so we rely more into the banking sector. And a good number of them, they are trading positively. And we are expecting to sustain this. And if this continue, we are likely going to close the index trade marginally positive.
Thank you so much, Mr. Kofi Garba, CEO, APT Securities, for sharing your insights on Business Incorporated. It's always good to have you.
Thank you for having me.
Let's move on to other regions now. We'll stop at the Gulf, where major stock markets were mostly positive at intraday. We see Abu Dhabi up 0.26%. We see Dubai also up about 0.5% there. Now, still within the region, Saudi Arabia was down 0.05%, and Qatar was up almost down because it hit the 10,000 points. The exchange, crossed that 10,000 level on stronger global energy prices, and we see that drop. But it's just, temporarily dropped there. We expect that turnaround for the close of trade today. Now let's look at the U.S. markets very quickly. In early trade today, stock futures fell on Tuesday after major averages closed higher to start the second half of 2024. We saw those bullish stocks as tech stocks outperformed. Now the Dow Jones futures, we see it down 0.31%. S&P 500 futures is also down. Same with the Nasdaq futures. We see that dip for the three averages. Now Wall Street is coming off a positive session for the benchmarks, that we know. But investors are deliberating whether the strong start to the year can continue in the back half of 2024. However, some analysts believe that the performance of underlying stocks in the major indexes remain at a healthy level for now. Meanwhile, Federal Reserve Chair Jerome Powell is scheduled to speak on Tuesday, that's today, in a couple of hours before a policy panel at the European Central Bank Forum. Now, May jobs openings and labor turnover report is also due out today. Markets will also end early tomorrow and close on Thursday for the 4th of July holiday. And on Friday, investors will get insights into the labor market with the June jobs report. Can't wait for that. Now, reports also coming in shows Nvidia is set to be charged by the French antitrust regulator for allegedly anti-competitive practices. People with direct knowledge of this matter are, reporting it, saying that's the first enforcer to act against a computer chip maker. Now let's look to Asia now, see how they performed, how they closed trade. Mostly fell on Tuesday, breaking ranks with Wall Street as saw the Nasdaq Composite reaching a new record high on the back of tech stocks. We see the Nikkei in Japan, rising their surge to 40,000 level, up 1.12%, while the broad-based topics rose. The index rose 1.15% to hit a fresh 34-year high of 2,856 points. Now the Japanese yen weakened to as much as 161 against the dollar, staying at a 38-year low. The Bank of Japan is also likely to cut bond purchases by about $100 billion in the first year. Now let's look at South Korea's Kospi, how it ended down 0.84%, and the small cap Kosdaq also closed down 2.04%. Now let's look at the Hang Seng Index. Is back from the holiday now, but up 0.29% to close the final hour of trade. And mainland China's Shanghai Index, that rose 0.08%. With that, have that on the screen. And Australia's S&P ASX 200 fell. On the flip side, 0.42%. The Reserve Bank of Australia released the minutes from its June monetary policy meeting, and we saw members of the board discussing interest rates, but eventually decided to hold them steady at 4.35%. Members also said it was still possible to achieve the inflation target within a reasonable time frame without moving from full employment. A lot of inflation data coming in with the South Korea inflation data. Investors are looking to that, and that is influencing the decisions in that region.
Yeah, so, but the minutes from the U.S. today, I think, is going to be a major
It's a major one, so we're just going to expect that.
Yeah. Thank you so much, Will. All right, let's go to Europe now, where, of course, the French election is the biggest story. 2 days after the elections, and France is preparing for a runoff this weekend. And the big question is, will the extreme right National Rally Party win a majority? And what would that mean for, first of all, France, and then the region? So we have Lars Holter now joining us for that. Hi, Lars. What can we tell from what's going on now in preparation for that runoff election?
Thanks for having me, Ini. Indeed, a lot of people are worried about what this next weekend will bring, although it wasn't a total surprise that the extreme right had such a strong showing in the election. After all, they were strong in the EU elections a few short weeks ago, and that was the reason why French President Macron even called for an early election. He wanted the French to show where they really stood politically, and his gamble on shocking the electorate and bring them back to the political middle obviously now didn't pay off. Now, his party and others are scrambling, trying to cooperate to deny the National Rally Party a win in the runoff. And Europe is watching, because should the right-wingers win, it would most certainly not only bring change within France, but it would have tremendous impact on the EU. After all, France has always been a leader in the European Union, not just as one of the union's largest economies, but also in terms of the country's pro-European attitude. And now the National Rally clearly puts French interests over EU interests. It's actually one of the party's key policy points, even though, fortunately, the party is not quite as radical as it used to be when it openly discussed for France to leave the European Union. At least that is off the table.
Yeah, so what about Brussels? Or what's the reaction from there?
Well, mostly for a leadership crisis. Together with Germany, France was probably the driving force behind most pro-European initiatives over the past decades. And to Brussels, it seems clear that we need a strong and united Europe for years to come, especially in these admittedly troubled times. We have a war in Ukraine and in Israel, of course, as well. We have an immigration crisis. We have climate change, a technological revolution with AI and such. And there is the threat threat of having Donald Trump come back as president of the United States. It's a global situation that needs stability wherever it can find it, and stability is not what you're getting from an EU without the commitment of France that we've been used to. As for the details, the National Rally, putting French interests above EU interests, will likely make it harder for the EU to sign new trade deals. And that could be a problem for other countries, including Germany, of course, where we, as an export-driven economy, depend on trade within as well as outside the European Union.
Yeah, it looks like Brussels will have to brace up for new beginnings. But what else is happening in the market? The euro was surging yesterday.
Well, staying with Europe, we're looking at some data. In Germany, inflation is up 2.2% year over year. That's a bit lower than last month. And now we're waiting on inflation data out of Brussels, where the numbers are expected to be somewhat similar, with inflation around 2.5%, also down a bit. We'll also see the latest jobs report for the union. And all of that, of course, will trigger another round of speculation over the ECB's future policy. And there's a lot to be discussed for sure, because central bankers are actually having their annual meeting in Portugal today, and there might be bits of news coming out there.
All right, Lars, thank you so much for that. Now let's come back to the continent of Africa. Kenya has been top on the news. Obviously, the finance bill and the protests by the youth. But discussing Kenya, but not the finance bill now, the government of that country has applied for an increase of import duty on crude palm oil in the East African Community Common External Tariff. The country was given the green light to raise the duty from the current 0% to 10% effective July 1, 2024. That's yesterday. Now, data from Kenya National Bureau of Statistics shows that a litre of cooking oil retailed at 326 Kenyan shilling in June 2024, imposing that 10% import duty on that crude palm oil could see it shoot up to an average of 360 Kenyan shilling per litre. And Kenyans will have to dig deeper into their pockets to purchase cooking oil and its related products. The country received a nod on the Common External Tariff, CET, joining Uganda, which raised its import duty on key raw materials used in the manufacturing of cooking oil, soap, margarine, and some cosmetics. And then there's palm oil refined products also, where Kenya will stay at 25% EAC CET rate and apply duty rate of 25%. That's about $500 or 64 Kenyan shilling per meter on whichever is higher for 1 year. So, I mean, whichever way Kenyans look at it, seems they have to pay more taxes to meet up with that IMF requirement to access some fund. And still in Kenya now, export earnings to the United States under the African Growth and Opportunity Act, that's AGOA, dipped a marginal 1.65% last year, hit by an overall drop in shipments of apparel products and denying traders gains during a period when the shilling was substantially weakened against the dollar. The Office of the United States Trade Representatives released a report to show that Kenya exported products worth 67.77 billion Kenyan shillings to the U.S. under the AGOA scheme in 2023, bucking a growth trend from the previous years. The dip in AGOA fortunes means that Kenyans missed a dollar windfall through 2023 when the shilling plummeted to record levels against the greenback. And then from there, we go to South Africa, where that coalition of government, the General Industry Workers Union of South Africa, have strongly criticized President Cyril Ramaphosa's recent cabinet restructuring announcement. And they've labeled it as catering to monopoly capitalist interests, especially condemning the separation of departments to accommodate political parties within the government of national unity. Well, that union argues that this move reflects a departure from the African National Congress, their historical role as a liberation movement, accusing the party of neglecting the working class. Meanwhile, the Free Market Foundation believe that GNU is too big and too costly.
Free Market Foundation believes that the so-called Government of National Unity is too big and too costly. Each of the 32 ministries will come with a large contingent of bureaucrats and support staff that will need to be financed with taxpayer money. Last week, we proposed cutting cabinet to 10 ministries, which would amount to significant cost reductions and efficiencies. It's also important to note that core economic portfolios did not change hands, including finance, trade and industry, small business development, and labor. While it is refreshing to see some new faces in the cabinet, the problem is not with personnel, but with policy. What is needed is widespread liberalization, privatization, and empowerment for ordinary communities and businesses to go about their economic activity.
We do think that this is a cabinet that has been appointed at the behest and in the interest of monopoly capitalists' interest in the economy, not in the interest of the overwhelming majority of the people in this country who are working class, who are poor, who are landless. This is a cabinet that is not going to address the historical injustices, particularly of the land dispossession. That means great majority of people continue to be landless. That means that great majority of people continue to be without housing. That is because it's a cabinet which was imposed by monopoly capitalists in the economy, masquerading as if they are a law of nature.
While still talking restructuring, the World Bank has said it is restructuring Nigeria's Digital Identification for Development, its ID4D project, to guarantee complete disbursement of the $430 million pledged for the project by the financiers. According to the bank, the restructuring became necessary as the co-financiers, the French Development Agency, AFD, and the European Investment Bank have threatened to cancel their finances if the World Bank ceases to be the implementer of the project after June 30, 2024, initial closure date for the project. Under the financing plan for the project, which was approved by the International Development Association in 2020, AFD is to release $100 million and the EIB is to fund it with a sum of $215, while the IDA, an arm of the World Bank, is to add $115 million. The Minister of International Cooperation, Rania Al-Mashat, witnessed the signing of two agreements worth €621 million with the European Investment Bank and SPE Capital Fund to support green sustainable industries and enhance equity investment in companies during the Egyptian European Investment Conference. The Green Sustainable Industries project is valued at €271 million and was signed by Al-Hashat, Minister of Environment, Director General of Neighborhood and Enlargement Negotiations at the European Commission, and then the Vice President, Vigliotti. The project is funded by EIB with €135 million, as well as a €30 million grant from the European Union and managed by EIB and funding from the French Development Agency, among other financing entities. Now, talking about financing now, let's see what Bitcoin can finance at this time, seeing it's recovered a bit. Still very sluggish movement, Ladi. Right. I don't think I can get used to this trend on Bitcoin where it's just so slow in movement. It's a boring market.
Quite boring, but definitely we're seeing the German government having some kind of fun, at this time, offloading another set of Bitcoin.
To make it even more boring? If it drops, it's not boring. At least there's movement.
Exactly.
Yeah, but we've been doing between 59 and 60, 61 for more than a week now.
For a couple of months now. We've seen that range after topping at over $70,000. So this is where we're seeing accumulation, at this time. Some sell-offs and some also taking opportunity in this market. But we're seeing the color right there. It's mostly green on the board, with ton being the most green right now. Let's look at the top headlines in the market. As I said before, see the German government selling another round of Bitcoins, 832 Bitcoins this time, shedding about 13% of their Bitcoin holdings. You see, the German government's been on an unstoppable spree of liquidating its Bitcoin holdings as per the latest information on Arkham. So we're still seeing more sell-ups there from German government. Then whale activity. We're seeing whale activity also in the market. Bitcoin whale transferred $114 million worth of Bitcoin to Binance. So definitely 1,800 Bitcoins from this whale wallet into Binance. So traders are wondering, what's he going to do at this point? Is he going to sell? And we're seeing the price of Bitcoin already reacting to some of these moves. Let's bring in Rume Ofi now, financial market analyst. Great to have you, Rume. Hello, Rume.
Good afternoon, Ladi.
Fantastic. Great to have you. Great to have you.
I can hear you, Ladi. Good afternoon.
Yeah. So we're seeing a lot of whale movement in the crypto market at this time. We're seeing the German government offloading more Bitcoins. Talk to me about the implications of these movements we're seeing on market prices.
It's there are a lot of movement going on, and I must say for a fact that at this point in time, it's not looking good because German government is selling, the US government is selling, and also 9 billion is going to be paid to creditors from the hack that happened in an exchange, Mt. Gox, at some point in time in 2014. So it's going to be huge volatility. People should expect some huge volatility in July because all of these coins held in the balance sheet of some of these countries, they are most likely going to liquidate to cash. And for those that were also involved in the Mt. Gox issue, they have been expecting their money for more than a decade now. And most likely it's going to happen like if they get their money, some most likely they're going to sell. So if you have some funds there, and after all of the issues that have happened, you get your money, most likely they're going to sell, and it's not looking very, very good for riskier asset right now, considering all the things that are happening in the US. Also, geopolitical crisis is there, and uncertainty. Inflation is not going speedily down like the Fed is actually saying. So people would rather go to safe havens, though there's this saying that says that Bitcoin is a safe haven, but it's relatively still new. So putting your funds there by this time, it's not the very best of the best, considering the fact that the ETFs is there is not enough to hold the market when the ships are down. These ETF guys are just there to make the quick buck and not the long-term holders like most retailers are. So if there are some down movement, most likely they're going to take their money out. But yesterday, significant inflows actually came into the market, which makes some sense, and we saw the uptrend to about $63,000 and thereabout. But as far as I'm concerned, in the short term, we have seen the peak in the market. We should tell ourselves the truth, even though some we know what to say. They will be saying on their various platforms that we're going to 100K, 80K, or 500,000 thereabout. For now, we've seen the peak at 73 or 72 thereabouts.
So I guess the sentiment right now is sell, sell, sell from what we've seen from the German government and some whale activity in the market. But we had the same conversations in the first half of 2024. The markets weren't looking too good. Inflation was still there. And we didn't know when the US were going to cut rates. But we still see Bitcoin delivered over 44% gains in the first half of 2024. So what are you seeing for the second half of 2024?
The first half catalyst was for ETF, was for the Bitcoin ETF. We saw the market move from the higher 30s to 70, early 70s, which makes a lot of sense because all of these institutional investors want to get into the market and make the quick buck and make a whole lot of money. This second quarter of the year is going to be the reality of the bumpy ride that the Fed chair has been said, Jerome Powell has been saying, it's going to be a bumpy ride. Right now, they are being careful. And the market is not accepting the fact that it's going to be higher for longer. At some point, the market has priced in about 2 cuts. Now, the one is not even looking certain, which is most likely going to be in September. Then maybe the next will be in 2023. But if the market immediately the market realizes that is going to be higher for longer, and there's not going to be a cut in 2024. It's going to be showtime for some huge downside. And I'm not going to be surprised. But the truth is, for those listening, prepare your mind that if you see lower price, our opportunities to buy quite all right. But again, if you have caught off guard, leveraging with huge amounts and some, you blow your account. You lose your money.
You don't want to catch
I don't think anyone wants to lose their money right now.
Yeah, you don't want to catch a falling knife at this point. But let's look at the MICA now in Europe. Markets and crypto assets regulation. We're seeing the stablecoin regime that came into effect in the European markets in Europe. How is this shaping sentiment so far?
So Europe is ahead in terms of regulation. It's unfortunate, even though the US, which is, so to say, the superpower, is not getting it right, still using Howey test of 1934 or thereabout to be able to benchmark either some other cryptocurrencies, being securities or commodities. You can see the cases going even more now from the SEC, that is Gary Gensler, suing MetaMask, Consensus, even the case of Binance now, Binance US is coming again on some staking activities and some others. We saw the SRP Ripple case here and there, So I am looking at a situation whereby the Europe getting it really clear in terms of regulation is a step further. They are saying that you must meet certain criteria to be able to operate, most especially in stablecoin. Stablecoins are benchmarked 1:1 with the dollar. The European Union, the European member states, about 27, if I'm not mistaken,
right,
have their own currency, which is the euro. Yeah, and they are saying that for you to play in our market, which is the electronic market institution, you have to meet those guidelines. And SECO, USDC, has met those guidelines. Those guidelines meaning you have to be able to benchmark your stable coins 1:1 with the euro as against the dollar. Okay. Which I also think that other clients we also need to take cue from other blocks. I was making mention the other time of the ECOWAS that if we can do something like that, it makes a whole lot of sense. Right. So if you want to play in that market and you can't meet those guidelines, you will not be able to strive. And it's going to tell in the broader market of the crypto space. USDC has gotten it right as being the only regulated stable coin being licensed right about now in the European amongst European states. So any other country that wants to do something with it, they're usually going to tweak a bit their regulation to favor the broader stuff. And USDT, which is the biggest, is going to lack on that because it has to start and the implementation has already begun. Fully is going to commence in December.
All right. We'll definitely keep tracking regulation because it's all about regulation in the crypto space. Thank you so much, Rumi Ofi. Always great having your perspective. Thank you. All right, so there you have it. It's all about regulation at this time, but we did say it was a tough market in the first half, but Bitcoin still delivered 44% gain. So who knows what's going to happen in the second half?
We'll keep our fingers crossed.
Fingers crossed.
All right, thank you, Ladi, and that's it on the program. Thank you so much for being a part of it. It's the second one for the week and for the month. We have a whole lot more to go. We'll do it again tomorrow, so do join me. But remember, you can always repeat this experience, all the information and all of that. They await you on our YouTube channel, Business Morning, Business Incorporated. I'm Nigerian. Enjoy the rest of your day.